stay tuned to stocks like FuBO making big moves that'll reverberate through November and beyond. That's because FuboTV and Disney's Hulu Plus live TV business have completed a transformative merger, creating a unique virtual multi-channel video programming distributor, VMVPD, and the sixth largest pay TV company in the U.S. with nearly 6 million subscribers. The combined entity will offer a diverse mix of sports and entertainment content, including over 55,000 live sporting events, while continuing to operate FuBO and Hulu plus live TV as separate services. FuBO will remain available through its own app, and Hulu plus live TV will stay as part of the Hulu app, bundled with Disney Plus, ESPN Plus, and other offerings. Under the terms of the deal, Disney holds a 70% stake in the newly combined company, while FuBO's existing shareholders retain 30%. The transaction provides FuBO with a $145 million term loan from Disney to help fuel growth and profitability. FuBO's management team, led by CEO David Gandler, will continue to oversee operations, driving the strategic direction with the support of Disney's resources. The merger creates greater flexibility for consumers, offering various subscription plans from more basic skinny bundles to premium options at competitive prices. Both services will remain available independently, allowing users to choose between different sports and entertainment packages. Additionally, the advertising sales team from FuBO will join Disney's ad organization, optimizing revenue streams. The new entity will compete directly with other major pay TV services like YouTube TV, which leads with around 10 million subscribers. And despite consolidating the market, the merger was cleared by the Justice Department's Antitrust Division. Next up, Bloom Energy saw a surge in revenue and profit for the third quarter, surpassing analyst expectations. Its revenue reached $519 million, up 57% year over year, and exceeding estimates of $428 million. Adjusted earnings per share came in at 15 cents, beating the consensus estimate of 10 cents. Adjusted operating income rose to $46.2 million, compared to $8.1 million in Q3 2024, while gross margins improved to 29.2%, up 5.4 percentage points from the previous year. CEO KR Sridhar highlighted the company's pivotal role in the evolving power generation landscape, driven by surging demand for electricity, especially from AI-driven data centers, and its partnership with Brookfield Asset Management, valued at $5 billion. Bloom also posted its second consecutive quarter of double-digit adjusted profit margins in its services segment. In addition to its strong earnings, Bloom Energy announced plans to offer $1.75 billion in zero-interest convertible senior notes due 2030, with an option for an additional $250 million. These notes will help fund general corporate purposes, including R&D, sales, and manufacturing expansion. A portion of the proceeds will also be used to exchange existing convertible notes due 2028 and 2029. In the AI arena, Qualcomm unveiled two new AI chips, the AI200 and AI250, designed for data center artificial intelligence workloads, positioning the company to challenge NVIDIA's dominance in the sector. The AI200 features 768 gigabytes of LPDDR memory per card, while the AI250 uses a near-memory computing architecture that promises over 10x higher memory bandwidth with lower power consumption. Both chips support direct liquid cooling and PCIe and Ethernet connectivity. Alongside the product launch, Qualcomm announced a partnership with Humane, Saudi Arabia's sovereign AI initiative, to deploy 200 megawatts of Qualcomm's AI200 and AI250 solutions starting in 2026. This collaboration aims to position Saudi Arabia as a global AI hub. Qualcomm's CEO Cristiano Amon emphasized that the partnership would help the kingdom build a technology ecosystem to accelerate its AI ambitions. The AI200 and AI250 are also expected to be commercially available in 2026 and 2027, respectively. Qualcomm's move into the AI space directly challenges NVIDIA, the current leader in the market. It marks a move into the growing AI data center market, expanding beyond its traditional mobile chip business. Going deeper into the data center domain, Hyperscale Data, ticker symbol GPUS, announced that it has regained compliance with the NYSE American's continued listing standards, specifically meeting the stockholders' equity requirements. GPUS had previously received deficiency notices in December 2024 and March 2025 due to insufficient equity, but it successfully met the exchange's criteria for 2 consecutive quarters by October 21, 2025. As a result, the company's stock ticker will no longer carry the .BC designation, and it will be removed from the list of non-compliant issuers on the NYSE American website. Hyperscale Data operates through its subsidiary Sentinum, Inc., which provides services in digital asset mining, AI ecosystem hosting, and co-location. The company also holds Alt Capital Group, Inc., which it plans to divest by the second quarter of 2026. Hyperscale Data also revealed plans to launch an on-demand NVIDIA GPU cloud platform in 2026 through its subsidiary Alliance Cloud Services. This platform will provide access to NVIDIA's advanced GPUs H100, B200, and B300 to support AI training, inference, generative AI, and high-performance computing workloads without the need for customers to buy hardware. The service will be hosted at Hyperscale's 600,000 square foot AI data center campus in Michigan, designed with sustainable energy management systems for high-density computing. Its existing operation at this facility includes NVIDIA GPU clusters for a Silicon Valley-based cloud provider, validating its operational capabilities. This new cloud offering is intended to attract enterprises, developers, and researchers in the growing AI sector. On top of that, Hyperscale's Bitcoin treasury reached approximately $68.8 million, representing about 50% of its market capitalization. Its subsidiary Sentinum holds 194.55 Bitcoin, including both mined and purchased units, and it's allocated $46.5 million in cash for future Bitcoin acquisitions. Hyperscale continues its strategy of dollar cost averaging to build its Bitcoin holdings, with weekly updates on its Bitcoin treasury. It also recently purchased over 2,000 Bitmain S21 Plus and S21 Pro Bitcoin miners, which are expected to significantly increase its mining capacity at its Michigan facility. For more on stocks and crypto, follow Ascencore. See you next time.